All right, so welcome everyone. Hope you're doing well. Hope your week has started as you planned it. Uh, it's not always like that, and actually, the week has started yesterday. Welcome. Today is Monday, April 25th, 2016, and this is the FX3 Tokyo Open Live Room. Welcome everyone. We have Leib Lopez, Sinatra, Roland, Alien, BW, Adinda, JM, Pankai, Dion. We have Desi and Arvin, Matthew, Greg. Thanks for joining in. I'm in now. Thanks for your patience. We've been fixing an issue with a microphone. Hope you can hear me well. I'm using environmental microphone today. So hope everything is good and you're having good fun without and with me. So thanks for joining in. We're gonna go very quickly here. This is a daily show from those of you who joined for the first time. I see some new faces. Alien, it's for sure a new face from from another worlds. And this is for you, Alien. Then this is a daily show where we feature real trading and real market analysis. We use this to prepare for our Tokyo session, although we are within the Tokyo session already, but also for the European and US sessions, which I normally trade, especially at the beginning of the week with my students. If you are interested, there's only one way into it, that's to join the FibStalker Methods coaching program. The daily show is a very heart of the Asian session with me. I'm Giuseppe Basile, also known as the FibStalker. I promise that I only stalk price using a variation of Fibonacci. I don't stalk people. Okay, so don't go around and tell that I stalk people. So I consider my risk management the most important thing in trading. Some people come to me and say, "Why, Giuseppe? After 15 years, 20 years of being in this game, I'm still losing money." And I would have stopped if it happened to me. But the real reason is that it's impossible in 20 years you don't stumble into a method that works. So it has to be something different. It has to be in your mind. It has to be risk management. And risk management is very important. In fact, I believe is trader's risk job number one. It's risk management. So trading forex and its derivatives, futures, options, and CFDs and other instruments with retail off-exchange transactions involve substantial risk of loss, as you know very well. It's not suitable for all investors. You may lose all of your initial investment, leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FS Trade risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The information I share in these webinars is material that is provided for you for general information and educational purposes only. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FS will not be responsible for any losses incurred on investment made by attendees as a result of any information in this webinar. All right, so this is the disclaimer. It is required, and please also review the FS disclosure on the website. All right, so let's get right into charts. I mean, we lost some time here, but we're going to recover it. So welcome FX Ambassador, Greg Matthew, Arvind, Desi Adinda, Dion, GM, BW, Alien, Roland, Leib Lopez, and Pankai, Sinatra, of course. Hello, Pankai, good morning to you. For me, it's good evening. And what I want to do, I want to, of course, dive right into the charts. My platform, that's me. Thanks for joining in today. Let's get into the charts here. And I have some stuff here. All right, so should be able to see my little TradeStation window here. I use TradeStation for charting as well as analysis of stocks, not only Forex. Forex is one of my specialties, but you will learn that when you will become full-time traders, you like not only to specialize on on one asset class, but you want to be able to move around and actually trade different asset classes. In fact, when I'm in in Europe, my reference schedule would be starting at 7 a.m. analyzing Forex for the European Forex Open, and then till 9:30, 10, trade the Open Forex, and then switch to European stocks or European futures. For example, that the DAX is a very technical market, and then start again for the afternoon. So start at 1, preparing for the 1 p.m., 12 to 1 p.m. to prepare for the US Open, and then witness the US Open till 2:30, and then prepare 3:30 for the stocks, US stocks. So that would be when I'm in North America, it's different. I'm based in Canada at the moment. And what I do, I actually trade the European Open 3 times a week. And That's typically at the beginning of the week, because that's when the opportunity cluster. And then during the week, I keep trading the US Open as well as the Tokyo Open, and that's what we do here in this show here. Now, I will often give levels well in advance for those of you who actually follow what I have given. We talked about, and I would like to start with silver, because silver, for a number of reasons here, silver has actually hit both of our targets. The first target was 1660, and the second one was 1650. It was actually, as you can see, touched, and then there was some selling. The next measure move is already in play here. It's being respected. That's the 1687. So if we break below 1667, you're going to see a much larger retrace, possibly even into the 1570, which for me would be a bless. Now, it's as you can see here, this level, the 1687, is being respected. That's the next extension long. So if that's the case, we're going to see this market continuing high. So we have really two options: a retrace below 1667 into the 1570, and that would be a great way to re-enter long this market, or just this market absorbing this move lower and this profit taking at that 1750 around 1687, and then continuing a move higher initially into 1874. Okay, passing by 1810. So great market. We've been trading this market since we saw the participation at 1485 with participation again around this area. And I know some followers of the room, as well as some of my students who did 11 plus unit of risk in this trade alone. So congrats to those of you who actually traded this market. Before we get into the request from FX Ambassador, who is a huge follower of pound, US dollar, and pound yen, probably because these are among, especially pound yen. Pound yen is the pair which has the largest pip average move ever. Now, the fact that it moves a lot does not mean that there is good pip movement, but generally valid pip risks is also larger. And we're going to review those markets. FX also saying, I hate the London session. Well, I love the London session. When according to the latest BIS, which is the Bank of International Settlement report in 2013, basically, the London volume is now at an incredible level. It's actually at 40.9% of the daily volume, and daily volume according to 2013 was 5.3 trillion, of which 3.3 trillion it's basically forex swaps and other contracts over the counter, and 2 trillion per day it's actually the spot market, and only 3.5% of it's retail trading. So retail trading also includes small shops and agencies that provide actually currency exchange. So that's just to mention that. So something that happens that involves 41% of the volume is important. But I respect what FX is saying there, because we all trade in the ways that makes us successful. So we don't have to trade the London session if the US session is what we can trade, or the US session, the Tokyo session makes us successful. So there's nothing to rush for that. Now, before we get into the other markets, I want to comment very briefly on, and if you hear a little bit of background noises, because as I said, we are actually, I'm actually using environmental microphone here. Now, before I touch on the others pairs here, I just want to comment on the dollar index. The dollar index, as you know, we have been studying in the last 2 weeks the 94.35 level. That's a weekly level where we were anticipating potential participation from weekly longs that came a number of times here. This level is not random, it's a precise level where an area of potential participation of weekly longs algos participate, and they have participated in the past 6 times, and we are seeing this participation again. To me, this participation is very, very important, because it tells me at least that the weeklies are willing to test the dailies algos, and the dailies algos are going to come now at 96.18. Okay, why this is important? Because this is the dollar index, is the ICE US futures, and we know that the dollar index is a combination. It's an index indeed of different currencies, whereas the euro dollar is around 60-64% of it, which means that the dollar index also tends to trade opposite of the euro dollar, obviously. And we have seen this lateral move here on top of a level of weekly support, and that has been matched by the euro dollar by this lateral move here after this market has, and I'm talking about the euro dollar now, after this market has actually pierced the next extension short. And so we know that this market eventually, at some point, when the dollar index will decide, is going to at least retest the 122.30. All right. So, but for the time being, this market has been very untechnical, has tested highs, and has all the potential to test now 109.59. If you're short from highs, you should keep your position short at least into 109.59. And actually, this short, in reality, the target comes a little bit higher here on this weekly time frame, and that comes to the level, a slightly higher level here, 110, basically 110.06. Okay. Hello, K7. Welcome. Yes, it has been a while, but we're still here. Thanks for joining in. And if you have any markets you want me to review, we can review them. So again, the list is growing back here. Dion Punk, GM, Greg, FX Ambassador, Matthew, Arvind, K7, Lee. Hi Lee, how are you? I sent an email yesterday. Have a look at it. I hope you will join us in the FibStalker trading room. Adinda, BW, Alien, Roland, Lib, Lovett, Sinatra. So um, this is what we see on the weekly. On the daily, we clearly see this market has already started its move lower and continues its move lower. So we're seeing, we saw today a reaction higher here, but that reaction was into a level that was already on my charts here. This is an extension chart, and I believe that this market is now at the end of this reaction higher. That was 112.80. I mentioned this level in the review I did for my students in the FibStalker trading room, and that's a separate private room that I only have for my students. And the area here participated, and there is still an opportunity to get involved in this market to bring price where? To bring price into this 111.43. That would be our first area of potential support. We're going to see a bounce out of this level for sure. Is that the final stop for this market? No, as I mentioned before, I'm looking for 110.06, 110.03 to be retested. Okay, so this is an extension shot, which means that this market can continue lower and meet lower targets here. The first one will be 111.81. The second one will be 111.30, which is kind of aligned with this 111.43. Okay, so that's interesting because when the smaller time frame, in this case the 4-hour time frame, supports the same the levels on the daily, obviously there is there is an important an important convergence. Some people would call this a convergence, but convergence is really when multiple levels converge on different time frames to support the same trade. Here what we're saying is that the targets on the 4-hour converge with the new longs, potential longs on the daily time, which is always interesting. Of course, we always have to understand whether that's just a bounce, a reaction, of that's a new long. So to me, the 111 for which is not a new long, it's a place where potentially this market could bounce locally, even up to 113, but then I think we have to test that 110. And that's my view based on the analysis of the presence of algorithms on different time frames. So K7, yes, you see the names. It's the family is getting bigger. That's always interesting. And before I get into the pound, which review very very often, I wanna review the US dollar and the Swiss franc here because I believe that this market has been very technical recently, and I'm gonna use this window here and show what was going on in this market. Now, you will remember that this market had produced huge pain and huge gains as well for some of the people who were short. I was not short when that happened, but I was not long because the model had already reached the second target. It's a little bit like this level being this behavior like we seen on the recently on silver. So my second target was hit and I was out, but this market actually had some interesting moves here. In a way, it stayed technical on a very very large time frame. We had the market reacting at in this area long 086.57 soon after, at the beginning of 2015, soon after that break. But actually, that open lower brought price right into that level. So the longs on the weekly time frame, I believe, are still in control here and can push price eventually in very long intermediate term, I would say a number of months, not that definitely weeks, but months into that target there, 109.89, believe it or not. And recently, then this market um, has been initially not respected the 92, 96, but then eventually we got participation in that area. So this market now it's moving laterally after testing this level. It is, and we have seen on the daily, but this can be seen also on the weekly. We've seen market participating on the downside here, but not technically. So I'm looking for this market for a retest of 99.13 before this market goes down, and this market is moving laterally. Okay, so it's moving between an area of lows here, which has been identified by this area 93 to 91, 91 to 193, and is moving from 102, from 103 here to 103. So these are the areas where this market is actually moving laterally. So how do we use this information? Well, if this market has to retest lows at 93 here area, first it has to go up before it goes down. And very interestingly here, um, we are going to study the sequences that we saw also on the 4-hour time frames in this market. Before this market can actually retest the lows, it has to test an important level. That's for me, it's the 99.13, and there is a nice, beautiful sequence of measure moves higher into that level. And once that ends, that could be the indication that the smaller time frame is not pushing this price higher any longer, and the larger time frame, which is the weekly and dailies at 99.10 here, will potentially come in and keep pushing this price right into that first target, beautiful 93 there. So let's see how this can happen on a smaller time frame and how you can take advantage of that, because all this analysis is not useful if you're not able to take advantage of it. Do you agree with me? So if we know that this market is moving into 99.10, how's gonna get there? How's moving to get there? Now, on the daily time frame, we see a nice measure move here, which has reached the first target, not yet into that second target, but in reality, this is if you don't study the other time frames, you don't see other things that have been happening in this market. So you might believe that this market is actually pointing into this second target, but the reality is that that's not the second target. In fact, I've been analyzing this market quite in depth, as I do with all the markets that I'm interested into. And you will see here that there's a different sequence of measure moves when you look at the 4-hour time, which is quite interesting. I don't usually get into this detail in my analysis that I do here. I mean, I provide levels beforehand, but tonight I want to do this more detailed analysis because as you can see here, the 4-hour time frame shows another different story here. There was participation at 95.90 level, which put price right into that first target. How beautiful is that? 97.89. And I don't change this level of purpose; they're always the same. In fact, they model potential participation from algorithms. And what happened here is that 97.25, 97, the high is 97.31. The actual level is 97.32, so just one pip below it. There was some profit taking, and then it was actually taken also from the news we had last week. But see, the profit taking was not enough to break the back of the algorithms which are pushing this price high. In fact, what happened is that that selling was only enough to bring price into the next area where we would see a potential participation higher here. In fact, price was picked up and brought into the first target there. Okay, so what can we look for in this market? If this market has to continue higher into that 99.10, we still need to see participation to the next level here. Okay, so if that participation comes, it's going to come maybe tomorrow, in the next 2 days. And this area is going to be a great area you want to watch for a continuation higher in this market. Okay, so I'm going to give you, an area that you want to look for. Whenever I have these blue lines on my charts, the 97.21, in this specific case, I never blindly buy this level. I study again, as I did on the 4-hour time frame, I study the sequence I see on the smaller time frame, typically the 15 minutes or even 1 minute. And after this level is tested, if that sequence breaks because of participation coming on this larger time frame on the long side, this time frame would be the 4-hour time frame, and the smaller time frame would be the 15-minute or even 1 minute time frame. So clearly the larger time frames wins. And when it wins and breaks the back of the counter trend movers here on the smaller time frame, that's our indication to enter this market. Entering on this 4-hour time frame would actually be a confirmation that this move higher is still in play and has the potential to bring price into that 99.13. So, Pankaj, I hope that it's a good enough review for you as well as all the other participants who want to review the market. K7 is if you can at one point, if you look at pound versus Japanese yen, created a bullish engulfing on the daily a couple of days ago, and Australian dollar, New Zealand dollar. So let's start from the pound versus Japanese yen, because this is something that FX ambassador has asked as well for. And in this market, those who follow me know that I've been looking at this market from the long side since it tested this the area starting 156.40. This is a long area, weekly longs, and you will remember that what I mentioned is that this market has to prove us that it has enough weekly strength to win the sequence of measurement of strong, short, sorry. With the market moving above 159.17, the confirmation came. All right. So to me, this market is now fully in control by weeklies, and this market is not just going to continue higher like a train here. It might for some time, but eventually it has to come back. So if it has printed highs, let's look at what is the area that we could pick up this price. I'm giving these levels in advance. These are the levels that I test all the time. These are the levels where we often see reversal. Okay, so that's a peculiarity of my method. You're very welcome, Pankaj. And this is what's the significance of this 158.80? This market is extended on the upside. It's a retrace. It's not going to be a large retrace, in my belief. And the first level we have to look at is going to be this 158.80, which means that this market, if this market moves into this area and finds participation, that's going to become an entry for 165.57. It's quite a sizable trade there. We're talking about 650, almost 700 pips. All right, so that's one way you can look at this market. This market is not just going to continue higher like that. Yes, it may still do it for a while, but eventually will need to come down to trade, to find again participation on the weekly time frame as well as the daily time frame from from players who wants to, if they want to, the algos have to show that they want to keep pushing this price higher. All right, so that's what I would see there. And then I want to close with I will not review the pound versus US dollar. I'm going to close with the Australian dollar, New Zealand dollar. Rather, I cannot cover all of them. I find this market crazy, but recently it has given a very good entry on the daily, and this market has actually confirmed twice the 110.47. So if you miss this the first time, you could actually capture the second time. This is what I call a notable trace, and you can actually identify this trace well in advance, so that even if you miss the first test, you can actually capture the second test. So this is a very interesting market on the daily, because I believe this market is actually moving higher to. Let me see if I can get more data here. So surely I can. And this participation of 110.47, again, you could have missed the first test, but when you use notable anchors, you might have missed this first one. You could not understand why it bounced here, but once you applied some of the techniques I have, this second retest could be captured in advance. And this is not a random level, it's an extension, notable extension, and we had algos participating at that level, and now those same algos are actually, I think they are targeting new highs here, and that's the 114.64 level. Okay, on the 4-hour time frame here, we are seeing a potential reaction lower, and this though doesn't end for me this move higher. This reaction that we're seeing here, and we can apply other models as well to confirm this. And let me see on another set of charts what this market is suggesting here. So this this move lower here is meant to continue, I believe, and we could get maybe another move higher, lower high here, but I believe this market is eventually going to correct even significantly here into a next area of potential support that could come as close as 111.90 here. Okay, so do anticipate a continued move lower here. I don't think this market is going to bounce here. It's going to continue and possibly offer a new entry long around this level. There is another aggressive level that I would not consider, and it has been tested. It could be retested again, but I believe this market can move a little bit lower to offer a new long opportunity. All right, so I will start now a review of this video, a summary right now. And we started with a review of silver. We didn't speak about the SP500, but the SP500 is correcting after printing higher highs. I will not touch on that, but we touched on the dollar index, and in the last few weeks we have actually looked at sorry, I'm opening too many things here. We have actually looked at this 94.35, and that has actually confirmed now. So we could see this price being pushed onto the next area short on the daily, the 96.18. We then quickly looked at silver. We celebrated our second target being hit here, and soon after that target has been hit. That was our 1750. You will remember that for silver we had two targets. 1660 and 1750, and both of them have been have traded. Now, the next extension long around 1688 has also traded. If this level will hold, it's going to push price even higher. Okay, so if you are building your position in this market, as I'm not doing, one little position added here could be important, because this market could not just move, might not just move below 1667, which is our level. It has to be broken to bring this price lower. So if that happens, I think we're going to have a better gift here from the market. 1570 is going to be our long to add a little bit on this trade, silver. We then reviewed quickly the euro dollar. We mentioned there are two levels we want to watch, 111.43, the other is 110.03. We explained the reason why this market can't get there, because the dollar index is reacting higher. In fact, as the dollar index reacts higher and hits that 96.20, this market can actually hit the 111.43, but even more, the 110.03. We then spoke about the Swiss US dollar Swiss franc. We mentioned again that this market to move lower, where we believe this market should be moving, as this market is still moving laterally here between the 90 to 93 area up to the 1 to 103 area here. It needs to move higher to meet that 99.13. And we show that there is a clear sequence of measured move longs here, and the next level to be tested is the 197.21. The market gets there today, tomorrow, I mean this is Tuesday already, and there is participation in this area, that could be a nice stub from 97.21 into 98.31, which is, just 100 pips, although this market could continue higher. It has previous highs here, but even 100 pips would be a sizable trade. If you manage risk properly here, this can become 5 to 10 unit of risk in gain. So that's an idea that you can keep in mind there. And then we reviewed the pound versus Japanese yen. We mentioned that this market weekly longs are now in control. And if this market comes back, a level that you're going to watch is 158.80 for a continuation long. And in the end, we closed with the Australian dollar, New Zealand dollar, and we mentioned how I didn't analyze the weekly time frame. The weekly time frame is showing a potential continuation long into 117 and eventually 119. So this is not the time to get involved into a swing trade to those levels, because this market is now correcting on the 4 hour and could correct as low as the 111.89 here. All right, so I hope you enjoyed the review here. I gave some explanation and some level in advance that you should be watching, because I believe that these levels can offer a very good opportunity for long trades here this week. The Australian New Zealand dollar is definitely in a move lower here, but it's not going to be extreme in my opinion. And I also want to remind for all of you who want to get involved that I'm about to start a new session. This is my 4th session of FibStalker Methods coaching program. This is not a course, but it's a complete program in which I take you by hand and illustrate in detail all these models that I apply on all the time frames. That's the mechanic of trading. But it doesn't end there. I also show you how to put all this information together to create your own trading system, and I offer 7 trading systems as well. So this is a complete approach for successful trading, if that's what you want to do. And if you're interested, I still have a couple of spots free. I usually take 15 students in each session. If you're interested, just let me know. Drop me an email at fibstalker@gmail.com, or go to FibStalkerTrading.com and you can find information there as well. All right, so I hope you enjoyed the review. I want to thank K7, Paglib, Lobets, Sinatra, Roland, Alien. Hope you find this interesting. BW Adinda, Lee, JM, Dion, Desi, Arvin, Matthew, Craig, FX Ambassador. I want to take the opportunity to thank Daisy, who's always available, and with her constant support, it allows us to make this to make this show not only real and possible every day, but also something that can help you try to identify that next opportunity that could bring those 5 to 10 reward to risk units into your account. So thanks a lot for being here. If you like the show, please tweet about it, and if you want to invite your buddies, and if you find that there is something new or useful in this show, please invite your trading buddies, and we are going to we can review more markets together. Thanks a lot, and have a great one. Bye bye now.